Welcome to Griffonomics. Today, we are taking a deep dive into a stack of SEC filings, Q4 2025 earnings call transcripts, and several analyst reports to investigate a major strategic inflection point.
Right, and it is a fascinating one to dig
It
into.
really is. So we are looking at SoundThinking today. They trade on the NASDAQ under the ticker SSTI. Now, you might actually know them better by their old name.
Right, ShotSpotter. That's the name most people recognize.
Exactly, ShotSpotter. But our mission for this deep dive is to explore their fundamental transformation because they are moving away from being just a single product acoustic sensor company. They're evolving into a highly diversified AI native public safety platform.
And setting the stage here, what makes this case study so compelling is watching a company absorb a massive, very public blow, losing their biggest customer, and tracking exactly how they try to engineer a turnaround.
Yeah, unpacking how a company handles a crisis like that is always incredible to watch.
It is a fascinating study in corporate resilience, but also one that is just fraught with execution challenges. We are going to look very closely at the raw numbers to see how they are weathering the storm. We'll examine this new SafetySmart ecosystem, the strategic shift in their sales approach, and crucially, we will objectively break down the serious risks that are keeping analysts highly skeptical right now.
Okay, let's unpack this. SafetySmart platform they're building. Because management has been very vocal that SoundThinking is no longer just a gunshot detection company.
Not at all. They have built an interconnected SaaS ecosystem, software as a service, and it consists of 6 distinct product lines that feed into each other.
Right, and to make sense of those 6 lines for you listening, let's look at how they operate together in the real world. Imagine a scenario where a crime occurs. The first product, ShotSpotter, their flagship acoustic system, instantly detects the sound of the gunshot and pinpoints the exact location.
And we should note that flagship product alone generates over $60 million annually. They charge municipalities roughly $70,000 to $75,000 per square mile, covering over 1,100 square miles across 170-plus agencies. So it's the heavy lifter.
The heavy lifter that initiates the whole sequence. So ShotSpotter gets the alert. Instantly, their Pulse Ranger product kicks in.
Right, that's their automated license plate recognition tool, or ALPR.
Exactly. So Plate Ranger identifies a fleeing vehicle's license plate near the scene, and then that data feeds right into CrimeTracer.
Which is essentially a specialized search engine for law enforcement. It aggregates over 1 billion criminal justice records.
Billion records. And they just launched a Gen 3 version of it that acts as a digital smart agent. It uses generative AI so investigators can do natural language searches.
Which completely changes the speed of an investigation. You aren't running complex, clunky database queries anymore. You are basically asking the system a question in plain English. And while CrimeTracer is pulling up that suspect's history, their resource router product is already at work.
That's the AI-driven proactive patrol management, right?
Exactly. It forecasts crime patterns, meaning officers might already be positioned nearby to intercept the suspect based on the AI routing.
And once that suspect is apprehended, the entire data trail, from the acoustic ping to the license plate read to the arrest, it all flows directly into Case Builder.
Their investigative case management system.
Right. And they actually recently secured a massive $18 million 6-year contract for Case Builder with the New York City Department of Corrections.
And rounding out the whole ecosystem is SafePoint, their covert weapons detection system, which I know we'll dive into shortly. But the key takeaway for you listening is why this interlocking net matters so much to their actual business model.
Because it creates friction.
Yeah. Exactly. Huge switching friction. By offering this suite of products, SoundThinking shifts from selling a single point solution, which the City Council can easily just chop from an annual budget, to providing deeply embedded public safety infrastructure.
Yeah, when your software is tied into emergency dispatch and daily patrol routing, it's hard to rip out.
The data explicitly backs that up. Their gross retention rate sits at a staggering 98 to 99%, and they boast a world-class net promoter score between 64 and 66. Once they integrate, they almost never leave.
Which brings us to a part of the story that we really have to scrutinize, the financial realities, specifically the full year 2025 review. Because when you talk about them almost never leaving...
But the city of Chicago did leave.
Yeah, they controversially did not renew their ShotSpotter contract in late 2024. And let's be clear, that wasn't just a minor flesh wound. It left a massive $9 million revenue hole on their balance sheet.
It did. But synthesizing the full year 2025 numbers paints a picture of a company running incredibly fast, just to replace that lost ground.
Which they surprisingly did, right?
They actually achieved record revenue in 2025. They hit $104.1 million. That is up 2% year over year.
That is just wild to me. So they replaced all $9 million of the Chicago revenue and then managed to grow another 2% on top of that.
It is a testament to the stickiness of that remaining customer base.
That is impressive resilience on the top line. But, and there's always a but, we have to look at the cost of that growth. The profitability margins definitely took a hit trying to fill that Chicago-sized hole.
Yeah, and that is where the reality check comes in for investors. They are still not JAP profitable. Their five-year net loss was $9.4 million.
And gross margins slipped too, right?
They did, down slightly to 54%. And if we look at adjusted EBITDA, that fell to $12.6 million. That represents a 12% margin, down from 14% in 2024.
You know, seeing a $9 million hole vanish is one thing, but looking at how much they had to spend to fill it tells the real story.
Yeah.
But to their credit, their liquidity is keeping them afloat. I mean, they have a very solid foundation to weather this storm. If you look at the balance sheet, they're holding $15.8 million in cash and cash equivalents.
With zero long-term debt.
Right. Zero long-term debt and $36 million available on a credit facility. Plus, they're getting leaner where it counts. Their sales efficiency is actively improving. They're now spending only 56 cents to generate $1 of new annualized contract value.
But you have to weigh that clean balance sheet against the forward-looking metrics. And what's fascinating here is the sheer impact of execution headwinds in the public sector.
Because if 2025 hit record revenues, why did the stock take a hit and why did guidance get lowered?
Right, that's the multi-million-dollar question. Despite the record revenue, management had to lower their Q4 2025 and full year 2026 guidance. They dropped it down to a range of $109 million to $111 million.
And the culprit for that drop was entirely tied up in government red tape, wasn't it?
Over $5 million in delayed contracts. Specifically, a $2.5 million statewide CrimeTracer rollout and a $2.7 million ShotSpotter renewal in Puerto Rico, both severely delayed due to agonizingly slow government procurement cycles.
Right. Budget committee debates, changing administrations, those things drag out enterprise sales cycles for months. So how are they pivoting the narrative?
Well, they are aggressively transitioning away from focusing on JAP revenue, which inherently lags, to focusing on annual recurring revenue, or AR.
Because AR tells us what the total value of these multi-year contracts is actually worth today.
Exactly. They exited 2025 with $95.4 million in ARR. And they are targeting $110 million by the start of 2027. That's a 15% growth target.
That's a highly aggressive target, especially considering the delayed contracts they just suffered through.
Which is precisely why they completely overhauled their sales leadership team to fix this. They brought in Kirk Arthur as the new Senior VP of Global Sales. He brings serious pedigree from Microsoft and the Secret Service.
And they brought in Manuel Nyland as VP of Sales for SafePoint.
Right. And doing that frees up Gary Bunyard to act essentially as a closer for massive, complex strategic accounts. He's now focused strictly on getting that Puerto Rico renewal across the finish line, landing a global top 5 healthcare system, and crucially navigating the political maze in Chicago.
Here's where it gets really interesting, because to hit those enterprise targets, they are leaning heavily into an area they call physical world AI.
Yes. It's not just software on a screen anymore.
Exactly. It's hardware integrated into the physical environment. SafePoint Alpha is the crown jewel here, and it is actively disrupting established competitors like Evolve.
Because Evolve uses those active stadium-style metal detectors. They require checkpoints, they require guards, and they cause huge lines.
But SafePoint uses covert passive magnetic sensors and 3D cameras. It identifies weapons without friction. People don't stop walking. They don't empty their pockets.
Which is highly attractive to hospitals, corporate campuses, casinos, places that want security without the intimidating checkpoints. That's a $20 billion total addressable market.
That private sector expansion is huge. But there's also some straight-up sci-fi sounding innovations on the municipal side. They are moving into drone as first responder protocols, or DFR.
Drones automatically dispatching to a ShotSpotter alert.
Exactly. A drone arrives in seconds to the exact coordinates, providing aerial intelligence before police even arrive. And they also have a new perimeter-based sniper solution. It listens for the supersonic snap of a bullet to protect utility substations from grid attacks.
And if we connect those innovations to the broader market, SoundThinking isn't building all this from scratch. They are leveraging open standard partnerships. Take PlateRanger, for example. It's powered by a partnership with Rekor Systems.
So they resell Rekor's computer vision tech into that massive $2.5 billion ALPR market.
Right. And PlateRanger integrates directly with Axon's Fusus platform, a leading real-time crime center solution. The takeaway for you listening is that this interoperability acts as a force multiplier for police. It turns fragmented data into actionable leads.
Okay, so we've mapped out the platform expansion, SafePoint, the partnerships, but we need to pivot the tone to look at the critic's perspective. What are the tangible red flags analysts are pointing out?
We had to neutrally report on the major detractor risks. First is dilution and insider selling. Stock-based compensation, or SBC, is outrageously high at roughly 14% of total revenue.
Which means every time they pay employees with new stock, the everyday shareholder gets diluted. Their slice of the pie shrinks.
Exactly. And that concern is heavily compounded because executives have been selling off large amounts of stock.
Not a great look. What's the second risk?
Political risk and budget constraints. They rely heavily on municipal budgets, and they're expecting about $3.1 million in ARR attrition in 2026, just because some cities lack funds.
Plus, there is ongoing progressive pushback. Civil rights groups like the ACLU push back on acoustic surveillance over privacy concerns, and officials like the NYC Comptroller have issued critical audits questioning the ROI. Now, regardless of where anyone stands on the politics, that pushback represents a tangible business risk.
It adds friction to every city council vote, which leads us to the third risk, the Chicago RFP. After the 2024 non-renewal, Chicago actually issued a new request for proposal for gunshot detection.
So SoundThinking submitted a bid to win it back, but they are stuck in a vulnerable wait-and-see posture.
Exactly. And that uncertainty is why analysts are heavily discounting the stock.
So what does this all mean? What is the final verdict for the listener following the stock?
The analyst consensus is a hold, but it's classified as a high upside watch. The stock is trading at a deep discount, roughly 1.4 times EV to sales.
Especially compared to Axon, which trades at a whopping 23 times.
Right. Success ultimately hinges on pipeline execution, hitting those ARR targets, and the potential massive catalyst of winning back the Chicago RFP. I'll leave you with a final provocative thought to mull over. As these AI-native systems become so deeply embedded, connecting sensors, drones, and criminal databases into city infrastructure, how easily could a city actually unplug in the future without crippling its modern public safety capabilities? Are we looking at the ultimate vendor lock-in?
That is a fascinating question. If it's the baseline standard, ripping it out might be impossible. We will definitely keep watching how SoundThinking navigates it. Risk defined, portfolio protected.